What if I told you that while the mainstream media obsesses over a handful of megacaps, a select group of companies is quietly executing a growth strategy that could leave them in the dust? Imagine uncovering opportunities with triple-digit revenue expansion and market shifts that even seasoned pros are just starting to grasp. Today, we're diving deep into the 8 fast-growth stocks poised for explosive upside, backed by strategic breakthroughs and massive market demand. Let's get started. First up, we have Nebius Group, ticker NBIS. This technology powerhouse is rapidly becoming a critical player in the burgeoning AI infrastructure market, developing full-stack solutions across Europe, North America, and Israel. What truly sets Nebius apart is its recent monumental multi-year agreement with Microsoft, valued at an initial $17.4 billion and potentially soaring to $19.4 billion. This landmark deal, utilizing nearly all of Nebius Group's New Jersey data center capacity by late 2025, is a massive validation of their world-class engineering and competitive edge. Analysts like Northland have dramatically increased price targets, naming Nebius Group a top pick. The company's Q2 2025 results were explosive, with revenue skyrocketing 625% year-over-year and its core AI cloud business achieving positive adjusted EBITDA ahead of schedule. To fuel this aggressive expansion, Nebius successfully raised $4.3 billion for securing over 1 gigawatt of power capacity by 2026. While the stock has surged nearly 470% in the past year, reflecting a premium valuation, this is justified by its hyper-growth trajectory and strategic positioning in the high-demand AI sector. Increased debt for expansion is a calculated risk for future dominance. Next, let's talk about DraftKings Inc., ticker DKNG. This digital sports entertainment and gaming giant, offering everything from sports betting to online casinos, is making aggressive moves to solidify its market dominance. DraftKings recently inked a major multi-year advertising agreement with NBC Universal, securing exclusive rights for integrations and digital sponsorships across top sports properties like the NFL and NBA. This strategic partnership is designed to dramatically expand its reach and boost customer engagement. While the stock has seen some recent fluctuations, it remains up approximately 20% year-to-date and over 100% in the last 3 years, reflecting sustained investor confidence. Despite intense promotional activity during events like NFL Week 1, leading to some margin compression, DraftKings delivered strong Q2 2025 results, setting company records for revenue, net income, and adjusted EBITDA, with revenue increasing 37% year-over-year to $1.513 billion. The company also reaffirmed optimistic fiscal year 2025 guidance. However, investors should monitor increasing competitive threats from emerging platforms and potential regulatory scrutiny over proposition bets. Insider selling has also been noted, but DraftKings continues its aggressive expansion into new markets, aiming for sustainable growth and profitability. Our third pick is Cameco Corporation, ticker CCJ. This uranium producer is riding a massive wave of renewed global interest in nuclear power, driven by its clean, secure, and baseload energy capabilities, further amplified by geopolitical tensions. CLSA initiated an outperform rating with a $102 price target, citing nuclear reactors' long operational lifespan as a direct contributor to Cameco's profit margins. The stock has delivered incredible returns, climbing nearly 60% year-to-date and an astonishing 835% over the past 5 years. This surge persists despite a recent retreat in uranium spot prices, signaling strong investor confidence in long-term demand drivers, especially with global uranium demand projected to nearly double by 2040. Cameco reported strong Q2 2025 results, with adjusted net earnings of $308 million and EPS of 51 cents, comfortably beating analyst estimates. While revenue slightly missed, the company is mitigating 2025 production forecast reductions through strategic purchases and mine adjustments. Investors should note the company's high PE ratio, but with a consensus, strong buy rating, and robust long-term contracting activity, Cameco is poised for continued dominance. Potential U.S. tariffs on uranium imports represent a risk to watch. Next up, we have Arista Networks Incorporated, ticker ANET. Headquartered in Santa Clara, California, Arista is a leading computer networking company specializing in multi-layer network switches that power software-defined networking in large-scale data centers, cloud computing, and high-performance trading. The company just delivered exceptional Q2 2025 results, with revenues reaching $2.21 billion, a substantial 30.4% year-over-year increase, and diluted EPS of 73 cents, comfortably surpassing analyst expectations. This robust performance led Arista to raise its full-year 2025 revenue growth guidance to 25%, targeting $8.75 billion, and setting an ambitious goal of $10 billion in revenue by 2026, 2 years ahead of schedule. A critical growth catalyst is its strategic focus on AI-driven networking, with AI networking revenue anticipated to exceed $1.5 billion in 2025, solidifying its position as a premier platform for AI accelerators. Analyst sentiment is overwhelmingly positive, with numerous firms raising price targets and maintaining strong buy ratings. While insider selling has been observed, Arista's robust profitability, including a 31.05% return on equity and a 40.90% net margin, underscores its formidable financial health. Coming in fifth is Lam Research Corporation, ticker LRCX. This technology leader specializes in semiconductor manufacturing equipment and services, providing the essential foundation for powering artificial intelligence and advanced computing. Deutsche Bank recently upgraded Lam Research Corporation from hold to buy, dramatically increasing its price target from $100 to $150, reflecting a more constructive view of the wafer fab equipment sector. Fueled by improving memory supply-demand dynamics, Lam Research's Q3 fiscal 2025 earnings exceeded expectations, reporting revenue of $4.72 billion and earnings of $1.04 per share, driven by surging demand for advanced AI chips. The company demonstrated impressive profitability with a gross margin of 49.0% and anticipates continued strong performance, with expected EPS of $1.21 for the upcoming earnings release. Lam Research has also taken significant steps to enhance shareholder value, including a substantial $10 billion share buyback program, a 10-for-1 stock split in May 2024, and a recent increase in its quarterly dividend. Its continuous investment in R&D, coupled with strategic cross-licensing, ensures a competitive edge in advanced packaging for AI workloads, positioning it as an indispensable partner in the semiconductor ecosystem. Moving on, we have Micron Technology Incorporated, ticker MU. Micron is a leading manufacturer of dynamic random access memory, flash memory, and solid-state drives, the very backbone of modern computing and AI. The company delivered exceptional fiscal fourth quarter 2025 results, with EPS of $3.03 and revenue of $11.32 billion, both significantly exceeding analyst forecasts. This capped a record-breaking fiscal year 2025, achieving $37.4 billion in revenue, a nearly 50% year-over-year increase, with gross margins expanding to 41%. The real catalyst is Micron's powerful position in high-bandwidth memory, or HBM, crucial for AI accelerators. Its HBM revenue alone hit nearly $2 billion in Q4 2025, and the company is a key supplier for NVIDIA's AI GPUs, with its superior HBM3E products. Micron is nearing a complete sellout of its HBM production through calendar year 2026, with substantial pricing agreements secured. With robust demand in broader DRAM and NAND markets and significant capital expenditures for new fab construction, Micron is strategically positioned as the sole US-based memory manufacturer, poised to benefit from supply chain resilience. Deutsche Bank maintains a buy rating, boosting its price target to $175, underscoring its explosive potential in this AI-driven memory upcycle. Next up, we have Advanced Micro Devices Incorporated, ticker AMD. A global leader in semiconductor technology, AMD is making aggressive strides in designing cutting-edge computer processors and associated technologies. The company is demonstrating robust momentum, primarily fueled by its aggressive push into the artificial intelligence and data center markets. Its Advancing AI 2025 event unveiled the Instinct MI350 series GPUs, with the MI400 series set for 2026, promising up to a 35 times improvement in inferencing. AMD aims to capture a larger share of the data center AI accelerator market, projected to reach $500 billion by 2028. Financially, AMD reported a record Q2 2025 revenue of $7.7 billion, a 32% year-over-year increase, exceeding Wall Street expectations, and provided optimistic Q3 guidance. While Q2 adjusted EPS slightly missed due to U.S. export controls, a ban now largely reversed, AMD is expanding its ecosystem through strategic partnerships, including a $10 billion global AI infrastructure collaboration with Saudi Arabia's Humane. Despite intensified competition from NVIDIA, analysts largely maintain a bullish outlook, projecting AMD's AI-related revenue to surge to $9.5 billion in 2025. Finally, Taiwan Semiconductor Manufacturing Company, ticker TSM, is not just a chip maker, it's the undisputed titan of the semiconductor foundry industry, enabling nearly every piece of advanced technology. Bernstein reaffirmed its outperform rating, expecting TSM to exceed its Q3 revenue guidance, driven by insatiable demand for AI chips and expanding non-AI segments. Analysts project TSM's revenue to jump by 33% in 2025, outperforming even the company's own impressive 30% prediction. The company's Q2 2025 report surpassed expectations, with revenue reaching $30.1 billion, a 44% year-over-year increase, and strong EPS. TSM has an ambitious global capacity expansion plan, committing an additional $100 billion in the United States alone, bringing its total Arizona investment to a staggering $165 billion for 3 new fabs, 2 advanced packaging facilities, and a major R&D center. Its technological leadership is unmatched, with advanced nodes constituting 74% of Q2 wafer revenue. AI and high-performance computing collectively represented 59% of Q2 2025 revenue, and TSM anticipates doubling its AI-related revenue in 2025 compared to 2024. Despite geopolitical considerations, TSM's strategic diversification solidifies its indispensable role in the global tech landscape. Now let's zoom in on the numbers, because a deeper dive into the raw data reveals fascinating insights into these growth powerhouses. Starting with market capitalization, TSM is the undisputed titan at a colossal $1.4 trillion, followed by AMD $259 billion and ANET $179 billion. On the smaller side, Nebius Group $27 billion and DraftKings $21 billion highlight opportunities for both established leaders and nimble disruptors. For revenue, TSM again leads with $90 billion, demonstrating global reach. Micron Technology, $37 billion, and Advanced Micro Devices, $26 billion, also post impressive figures. Nebius Group, despite its smaller $118 million revenue, exhibits astronomical growth, indicative of explosive early-stage expansion. This shows a mix of cash flow machines and pure growth plays. Now, for profitability via gross margin and EPS. Arista Networks boasts an incredible 64.24% gross margin, followed by TSM, 57.27%, and Micron, 56.56%, reflecting strong pricing power. EPS leaders are TSM, $8.78, Micron, $7.58, and Arista, $2.54. However, Nebius and DraftKings operate with negative EPS, signifying heavy investment in growth and market capture, a common trait for high-growth disruptors. Notably, none of these rapid growth companies pay a dividend, underscoring their focus on capital appreciation by reinvesting every dollar back into accelerated expansion, R&D, and capturing future market share. So, which of these fast-growth titans or nimble disruptors do you think has the highest potential for massive returns in your portfolio? Let us know in the comments below. I'd love to hear your thoughts and what other growth stocks you're watching. And if you're looking for even more under-the-radar opportunities, don't miss our video right here on 7 best AI stocks to buy under $100. You'll wish you bought sooner. Click on this video here.